back to another Allocators Playbook episode. Over the past month, I spoke to top allocators in Asia, including the former group CIO of GIC in Singapore to the chief investment officer of Korean Investment Corporation, which were just among a few prominent leaders. Most recently, in the US, California Public Employees Retirement System became the first US pension to adopt a total portfolio approach, replacing 11 asset class benchmark with a single reference portfolio comprising of 75% equity and 25% bonds. With the same sentiment, Hoon Lee, the chief investment officer of KIC in South Korea, is working towards completely adopting this approach within the next 2 years. Coming straight to you from our fifth annual Korea Investors Forum sidelines, I present to you Hoon Lee Min from the University of Suwon in South Korea. Today with me is Hoon Lee, the Chief Investment Officer of Korea Investment Corporation. He's being awarded with the Fund Leadership Award. Hi Hoon, how are you feeling?
Yeah, good. How are you doing? It's great honor to receive the prize from the market group.
That's amazing. And you're building your total portfolio approach, which is set to be out in 2020, finished actually in 2026. Where are you in the process right now? And what is the due diligence looking like?
Okay, we KIC decided to adopt the total portfolio approaches in 2027, given that we need to improve risk-adjusted returns in our portfolios. And we are doing several projects to adopt the total portfolio approaches. In 2019, we already adopt the absolute return evaluation to our systems to improve the risk-adjusted return in our portfolios. And we had done a lot of jobs in the asset allocation that should lead to higher returns in our portfolios. And now we decided to adopt the total portfolio approaches, mainly due to two reasons. First one is to definitely improve the risk-adjusted returns. Second one is to generate more flexible organization cultures. First one is the asset allocation usually account for the more than 90% of the total return, so that we need to do more flexible and active asset allocation in our portfolios. So that's the main reason we decided to adopt the total portfolio approaches. Second reason is to have a more flexible organization cultures. So that's the main two reasons we decided to adopt TPA.
That's brilliant. And how are you feeling today? Also, I wanted to know what are a few key turning points in your career that have shaped who you are and that have shaped your portfolio since you're receiving a Fund Leadership Award?
Okay, it's a great honor to receive the Fund Award. And my turning point at the career is to join the KIC 12 years ago. Before joining KIC, I worked as a portfolio manager and equity analyst in the iBankings and asset management companies. At the time, we mostly focus on the generating excess returns rather than doing the asset allocation to lead to higher returns. And at KIC, I was given a great opportunities to do asset allocation for our entire portfolios, and that's one of the important changes in my careers. That could be the important turning point in my careers.
That's amazing. Brilliant. Thank you so very much and congratulations again.
Okay, thank you.
TPA isn't just a buzzword anymore. It's about bringing visions and decisions together as a team. Today with me is...
I'm Sung-Hoon Min from the University of Suwon in Korea. Nice to meet you all.
Amazing. You just got off a panel talking about TPA. What were your key takeaways?
Korea is in the early stage of adopting TPA. So there are various discussions and very different opinions. We could share many insights here. And yeah, it was very helpful for me to establish my own opinion. Most panel emphasized establishing good organizational culture is the key for the adoption of TPA, but organizational culture is a little vague concept. We have to develop the concept as a more specific form.
When if you had to describe TPA in 3 words, what would it be?
Dynamic, holistic, and groundbreaking.
Some very fascinating opinions. What I'm very curious to dive into is how pension plans of different sizes will approach TPA and how allocators in the current environment and even in the next couple of years will be navigating challenges around the total portfolio approach. And that is from changing conversations with the team, navigating what type of TPA works well for them. But for now, we'll move on to Singapore, where I had the chance to speak with the former group CIO of GIC, Jeffrey Jane Sabakit, about his outlook with private credit, the conversations with manager, and what kind of opportunities he finds interesting. Adding on to the same sentiment, I also spoke to Lee Ping Tan, this Chief Investment Officer of Singapore Institute of Technology, about where she finds exciting opportunities within private credit and her outlook on the same. Today with me is a very special person, Jeffrey Pritchett, Jane Sabakit. He's just come off stage winning a Lifetime Achievement Award.
Thank you.
Congratulations, Jeffrey. How are you feeling?
Askan, thank you very much. It's a great honor to receive the award. Frankly, I wasn't expecting this kind of award, but anyway, I'm very thankful for the recognition.
Amazing. And currently, a lot of allocators, especially within private credit, are both excited and nervous, a bit cautious as well. What is your outlook on the same?
Yeah, no, I think private credit has had a very good run. We first of all, maybe starting 3 years ago, we had very high base rates, which obviously helps the beginning yield, but we also had large spreads. And that was because there really were a lot of borrowers were out there that banks were not servicing well. Some LBO-based companies that needed new financing. And so there was a lot of demand and not that much supply. I think, 3 years, 4 years after that, actually, we've had a lot of supply come in and credit spreads have tightened quite a bit. So I think from here going forward, especially if rates come down, then maybe the future absolute returns might be a little bit harder. But I think the other important thing is that at the end of the day, each manager that does private credit has a different underwriting capability, a different origination pipeline. And so the credits that are in each of the managers' portfolios will be very different. And I think it now becomes even more important for the allocators to choose their managers well, to make sure that their managers are the ones who continue to underwrite with discipline, who have strong documents and good covenants.
Absolutely. And as a former group CIO at GIC, you've strategically chosen your team and you've retained good staff. How have you done that?
Well, it's very kind of you to say that. I mean, we were very fortunate at GIC in that we were a large organization with a large AUM base, and therefore we could actually afford very large teams. And so every asset class, would have the headcount to be able to hire good people. However, being a government organization, there's only so much that we can pay, and relative to commercial GPs, we needed to hire people earlier in their career before they, had a lot of carry and therefore wouldn't move. But I think we were fortunate in that we were able to continue to train up and incentivize our staff, and importantly, as you said, to help them to stay. And in order to do that, I think what we tried to do was to figure out what was the potential that each person that we had hired in really had, and to try to accelerate their promotion if possible. And then as managers, then we also try to make sure that we understand and care for each employee as a person rather than just a producer of alpha and so on. So I think the combination of that personal attention, the possibility for development has helped us to retain people.
Absolutely. That's, again, I have to say that's very well put, very beautifully put. Lastly, what are a few trends that you're anticipating in the next 5 years, especially within the private markets?
Yeah. So I think maybe clearly the broad trend is AI.
Yeah.
And some slivers of the private market, whether it's VC or in infrastructure, data center, or in energy, where you're building for this data center, obviously seeing a very good tailwind right now. And I think, but the private markets at large, I think will end up being users of AI. And I think we will see a differentiation both in public and private markets between the people who can use AI well, uses its capabilities to improve their operational processes, raise their margins, outcompete, and so on. And those companies will do well, whereas those who are a bit slower may actually lose market share and so on. So I'm afraid within both the public and private portfolios, we will see that differentiation between winners and losers. And the question is, how do the GPs really get their companies to then get on the AI bandwagon fast enough? I think the other thing that I think about, is that from longevity perspective, we are, seeing more and more people put money into private illiquid assets, including on the retail side. But in order to really finally get your exit for these things, then the public markets still need to pick up and for you to be able to get exits. But it does seem like we're already extending that longer and longer, and therefore as a result the IRRs are deteriorating a little bit. So I think that will be a headwind for privates.
Amazing. Thank you so very much. Congratulations again on all your hard work and success. You truly deserve it.
Thank you so much.
Thank you so very much.
Pleasure to be with you.
Yeah, thank
Thank you. All right. Thank you.
Today I'm at All Singapore 2025, and with me is Lee Ping Tan, the Chief Investment Officer of Singapore Institute of Technology. Hi, how are you doing?
Good. How are you?
I'm good, I'm good. You spoke at the private credit panel today. What were your key takeaways?
Yeah, I think it was a great panel. Learned a lot from my colleagues and on the panel. So I think the key takeaway is Asia looks like an interesting market that is growing and developing. We have to be cognizant of the risk because Asia is obviously a heterogeneous market. But I think there are lots of opportunities to be explored. Yeah.
Absolutely. And how are you finding the event today?
Great. I think there are lots of good speakers. Look forward to a couple more in the afternoon.
Yeah. And with the growth of AI, what kind of opportunities do you see in the market? And are there any security issues attached with it?
Yes, I guess for AI, obviously, the Max 7 in US have been key drivers of returns, particularly in the US equity market and in general. I think it will continue to play a very important role for AI in terms of how it's going to disrupt the way we work as well as investments. So certainly an interesting case to look at.
Yeah. And what are you excited about in your portfolio for 2026?
I think one of the things, as I mentioned, we're also looking at Asia private credit. We looked at it a few years ago. It was still quite nascent, but I think today it's a lot more mature. There are a lot more players with a longer track record, so it's something we'll explore further.
Amazing. Any sectors that you like in this space?
Generally, we prefer corporates. Senior lending. Yeah.
Amazing. Thank you so very much. And it was lovely having you.
Thank you very much.
So much.
Thanks. Thank you.
As allocators in the current environment are extremely nervous yet very excited about private credit, I personally, as a reporter, am very excited to see where in the next 2 years would the opportunity lie, and if it's just a big bubble of private credit in the current environment. I guess we'll have to wait and see. But for now, we'll move on to our final segment where we'll hear Sridhar Chityala from the Chityala family offices talking about private equity and venture capital. And then we'll move on to our final segment where we'll collectively gather macro outlook from both our sidelines in Singapore and South Korea.
With me is Sridhar Chityala, the chairman of Vedas Group, the Chityala family office.
Right.
How are you doing?
Wonderful. Thank you. Nice to be here.
You just got off a panel focusing on markets and
Yeah.
market volatility and growth of private markets.
Right.
What are your outlook?
Well, I think the private markets is going to coexist with the public markets, but the valuations that people extracted from the private markets, doesn't matter whether it is private equity or venture capital, in the leading up to the 2020 COVID.
Yeah.
And post-COVID, I think we have seen more harmonized and normalized returns, which is not, 10x and 20x and so on, but more in the 7 to 12x kind of a range, or even 5x to 12x kind of range, is more, and the money is going towards more traditional businesses with organic growth in profitability and underlying value of the asset to the ecosystem.
Absolutely. And we were having a conversation off the camera, and he mentioned that at this point, 80% of venture capital should be written off. Do you
Sure.
want to dig deeper into that?
Well, I think that the what I meant by that is if you have done innovation somewhere, 2010 to 2015, and you have deployed capital, and we are in 2025. Historically, companies kind of mature, evolve, and integrate themselves into the ecosystem as a valuable business innovation
Yeah.
within a span of about 7 to 10 years, which means you have either clearly missed the boat or in terms of your product market fitness, or it has lost relevance to the market. So therefore, and today we have many of these technologies are built on Web 1.0 and Web 2.0, and the world has very clearly moved, and new investments are being directed towards more next generational high-end technologies, be it in the defense, be it in the supply chains, be it in the quantum computing, be it in the energy sector. And none of the systems that innovated around the 2010 timeline or 2010 to 2015 timeline kind of fit into that model. So this is the rationale for me to say that 80% of these companies will eventually be facing the write-off.
Absolutely. So, as one of the top leaders in the market, where are you finding opportunities within the private equity space, especially the secondaries market?
Secondary market, there's plenty of opportunity because the discount is ranging from 30% to 70% across all sectors, fintech, healthcare, insurance, education. There's plenty of opportunities in the secondary market where you can pick up good companies at a good market discount. But really, you must have courage and conviction that once you pick up this asset, that you can put a governance structure to extract value and generate growth and profit for your business.
Absolutely. Wonderful chatting with you. Thank you so very much.
Thank you. It's a pleasure.
Yeah.
And I enjoyed the conference and the people, and I thank them all for a wonderful event.
Just one last
Thank
question
you.
before you go, actually. What kind of trends in the next 5 years? What kind of trends do you see?
What kind of trends that I see?
Especially in the private market.
In the private market, the trends are going to be there's a big effort in the rare earths. The reason being almost every major item that is being manufactured has a rare earths component. That's clearly one. The second, I also see a big opportunity in power generation. Okay, because many of these data centers are going to consume large amounts of power. Hasn't been quantified.
Yeah.
And you have already seen people like Amazon, Alphabet, even Apple investing in NVIDIA, investing in power generation. So I see big opportunity in the power generation. That's the second area. The third, I think, is defense. I think I mentioned in the panel that close to $8 billion of venture capital has gone in as a date in 2025. So they will be, and defense is going to be opened up starting from United States, access to venture capital and private capital. So I see opportunities in the defense, just to list 3 areas.
Amazing.
Okay.
Thank you so very much.
Thank you.
It was
Thank you.
lovely having you at the conference.
Thank you. Thank you. Thank you.
Today I'm with Jiu Choi from Korean Investments. Hi, welcome.
Hello. Yeah, thanks for inviting me for today's session.
It is wonderful having you, and you kind of spoke about the macro environment in today's panel. What are your key takeaways?
Key takeaways can be divided into parts. So the first one is that also the question regarding the whether the UST, US Treasury, and also US dollar can be a safe haven, not only in the short term but also medium and long term. After the tariff dispute from the President Trump, both the US dollar and also UST value have been somewhat decreased compared to the previous year. And so yeah, many panel shared our idea regarding this issue. So that was the first one, and the second one is that of course we also shared our view on the what is the out of consensus view on the 2026. And one panel just mentioned that even FRB can hike its policy rate in 2026, given its inflation trajectory. And so yeah, that was also interesting for me.
That's brilliant. And how do you think AI, artificial intelligence, is impacting the South Korean public market?
Yeah, so of course the AI is the most important part on the South Korea economy, given its high dependence on the semiconductor industry in the manufacturing part. So I think that there can be this also can be divided into two parts. So the first one for the short term, of course, the semiconductor production coming from the AI cycle should be quite beneficial to the South Korea. So right now, even though the other products of the South Korea export, so such as like steel and also aluminum, or even the chemical, all these are quite struggling, not only due to the tariff dispute, but also also the high competition between the China and also Middle East. But however, semiconductor exports is now doing pretty good, which is mainly due to the AI cycle, and therefore we think that this also should be highly beneficial for the South Korea economic outlook for the 2026. But in medium and long term, maybe I believe it's better to think about how much the AI can substitute the traditional labor. I would say right now the AI has started to substitute some of the workers, not only in South Korea but also many countries. And I personally believe that this trend could be continued for longer. So for this reason, maybe it would be better to think about how the AI can substitute or even restructure the overall labor market situation in South Korea. So yeah, so that's my view.
Amazing. And how are you finding the event so far?
Yeah, so this event is pretty good for me. I would say that the 50% of clients are from the onshore, but however, 50% of the clients are from offshore. And most of them are quite well-known experts, not only for the public market, but also private credit, and also even infrastructure, and also real estate, or many things. So I am really now being happy to share our variety of views regarding the market from many parts of perspective. So thanks very much.
I really hope you enjoyed this episode, and I'll see you in the next one. Thank you.